Hey guys, welcome back to another video by Fully Informed Trade, or Fitrade for short, knowledge for everyone. My name is Alex Cho, and today I'm just going to go ahead and review some stocks, talk about, not really the stocks, more like the stock indexes, talk about some commodities, review some currency plays, well not really currencies, but just currencies in general, and yeah, and review the bond market as well, and talk about some key things, some very interesting points. So I don't have a lot of time, so I will be talking relatively fast. So hope you guys can all keep up, and let's go ahead and review all these facts. First of all, U.S. dollar index has been able to strengthen on Thursday. Trading session, that was the last trading session before the Easter holiday. Stocks weren't open on Friday because we had Easter holiday. Easter holiday means that stock markets generally aren't open. Therefore, the currency kind of floated upwards on Friday because there was no incentive for any major entity to go off and pump up the stock market just a little bit, pump down the value of the dollar just a little bit. Therefore, bueno, people have money over the weekend, or people feel richer. With that one song, I feel like money. Yeah, that's the type of feeling people like when going into the weekend. And pretty much, once you give people that feeling over the weekend, a lot of institutions, particularly the Federal Reserve, feel that people will spend more money. Okay, so this is a whole entire wealth effect, I guess you could call it. That's what a lot of people are calling it. So again, it's just this phenomenon, the social phenomenon that we noticed, and some people think that there's a conspiracy behind it, therefore they blame the Federal Reserve. Again, I don't know what's the truth or what's not, but I'll just stick with the Federal Reserve theory because it's in the best interest of the Federal Reserve, at least for Ben Bernanke, to make the economy better, because banks, that's not their best interest. They're not out there to make other people money. They're out there to make themselves money. Now, let's go ahead and move on and talk about the Euro-US dollar. This too was impacted by the Easter holidays. So this, Euro-US dollar did close a little early. It did trade up a little bit, and then it pulled back. So again, flat on the Euro-US dollar, nothing much. Although if you guys move back, 3-month chart, Euro-US dollar did have a sizable move upwards. As you guys can see, throughout the week, Monday through Wednesday, do you see that monstrous move upwards? That's pretty much what caused the huge rally in the equity markets in a very, very short period of time. Again, if you guys notice, anytime you see a huge sizable bounce in the Euro-US dollar, April 18th and onwards, you saw this huge bounce. It even broke past the previous area of resistance right here, guys. And that's a triple barrier. No, it's a quadruple barrier. If you break a quadruple barrier, that's a really, really good sign. It broke a quadruple top. And pretty much when you break a quadruple top, you find some support on it, double support, and then you move higher on top of it. That's really positive. It just gave a lot of that extra momentum people needed on that Thursday trading session to make some more decisions to be buying stocks and going long. Now, moving on, I want to go ahead and review the US dollar Japanese yen. Now, I have no clue what's going on here. I think either the central banks have dropped the ball or something, but basically the US dollar has weakened to the Japanese yen again. And that kind of gets me thinking, at first the whole entire idea was to stabilize the Japanese economy, and that's it. So that kind of gets you thinking, well, how long would the central banks really, really honestly, for goodness sakes, try to pump up the value of, or push down the value of the Japanese yen? Not for long. Why? Because the Japanese economy is a huge consumer-based economy. It really is. Now, when you have a lot of consumers consuming stuff, and they have a really strong currency, would it make any sense for yourself to weaken or strengthen your currency when it would weaken your exports? When Japan already has some pretty strong export numbers, and if you weaken their currency for them, how would that benefit the U.S., France, China, Germany? It really wouldn't benefit them. It would benefit Japan wonderfully, but it wouldn't benefit us at all. So therefore, I'm honestly thinking that the central banks dropped the ball, and they dropped the ball on purpose. Why would you help somebody when it's not in your best interest to do so? I mean, everyone's out to basically represent their own political interest. And I'm not here to talk ethics or, oh, that's wrong, that's bad, blah, 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 blah. No, I'm not talking about that. And quite frankly, I don't care. I'm just going to state the facts. And quite frankly, it is not in the political interest of the U.S. government or any entity to pump up the value of or push down the value of any other currency pair. Okay, but when they were out to do it, and when we were down here at 81, that's when I was like, yeah, buy. Now, honestly, I don't know what's going on since they dropped the ball. Apparently, I don't think they're gonna try and push up the value of the U.S. dollar at all. At least not in the foreseeable future. And besides, if the U.S. dollar does weaken, that's pretty beneficial for global stocks in general. Therefore, I don't see any incentive, and just in general, I mean, there's no incentive to keep the Japanese yen pushed down in value. Now I want to go ahead and move on to the U.S. dollar Chinese renminbi yuan. And basically, the U.S. dollar has been weakening here as well. So, it's not just the euro that has been weakening. It's been, the U.S. dollar has been weakening across the board everywhere. And pretty much in this case, the U.S. dollar has weakened. Now, the thing here is that the U.S. dollar has weakened in a very, very short period of time. If I go ahead and look at a 6-month chart, you guys will notice, or just a 2-year chart, you guys will notice that there's been a huge sizable drop, and we're seeing a huge sizable drop in April alone as well. Now, Premier Wen Jiabao, and this is the basically, I guess you could call it the vice president, but not really. I'd call him the president because he does manage the military. He's basically in charge with the execution of all the stuff that happens, and I think Hu Jintao is basically the judicial branch, I guess, but he's a solo judicial branch that basically determines whether anything under his own martial law or whatever is considered good or bad, or whether it'll go through or not. But he can basically change any decision made, or reverse any decision, or make a decision. Nobody could stop Hu Jintao. But basically, the person that's trying to push down the value, or push up the value of the Chinese renminbi yuan, is Wen Jiabao. He does manage the economics of it, and he is doing a pretty darn good job. Now, what does that mean for us in the U.S.? Well, that means higher prices. Why? Because the amount of U.S. dollars needed to buy the same amount of Chinese goods when sold at the same exact price, demanding the same amount of money as before, it means that if we want to get the same amount of value, if the Chinese people want to get the same amount of value as they did before, that would mean that we would have to give them more U.S. dollars per unit of good. That's how it works. Now, how does that benefit China? Well, it reduces inflation like Wen Jiabao wanted. Number 2, it gives a bigger wealth effect. When you sell goods for a higher price, it makes you more money, therefore making you richer, even though you're just getting the same of everything. But kind of, yeah, not really. It's hard to explain, but I don't have the time in this video or the luxury of it to explain everything. So basically, with this continued downtrend in the Chinese renminbi yuan, anticipate the price of U.S. goods or stuff coming out of China to keep going higher and higher and higher. That means consumer price index inflation, real inflation. Moving on, June 2011, crude oil contracts are going up. And remember, traders trade on future anticipation or future expectations over the course of 2 years. Now, since after that nuclear crisis in Japan, and we have issues coming out of Libya, the thing is that we don't have any alternative aside from crude oil. It's either you buy crude oil or you don't drive on the highway, right? There's no elasticity. I mean, if you can go with smartphones, you can choose between an Apple iPhone or a BlackBerry or a Samsung Galaxy phone, right? Crude oil, you don't have that garden variety selection. Therefore, there's no competition. On top of that, the price of oil will keep going higher as demand goes higher, and we don't use our alternatives because we choose not to. The main reason why we're choosing not to is basically because of that disaster that happened in Japan. After that, a lot of countries have forestalled their nuclear plans, especially the U.S. The U.S. government, the U.S. economy is the biggest consumer of crude oil by far, and yet we are far behind just about every other economy in terms of finding alternatives. After that Japanese crisis, I mean, we haven't had a nuclear plant built in the last 30 years. because of that 3 Mile Island incident. Now it could just be another 30 years before even any plan is ever considered, and by then crude oil price will be sky high expensive. All right, next, bonds. All right, so James Bond, the bond market, but pretty much the bond market is going to go. It has to basically go down pretty soon, and that's pretty much because the devaluing dollar. Devaluing dollar generally means inflation. Inflation generally means higher bond rates because bond investors demand a higher coupon interest rate to keep up with inflation. That's the way it works. Of course, bonds would have collapsed by now if the Federal Reserve wasn't quantitative easing or quantitatively manipulating markets. Now, I'm not saying that manipulation is bad, unethical, whatever. I'm not gonna get into that debate. But that's basically what's gonna that's basically what's going on. Now, that being said, you know, quantitative easing means devaluing a currency, not debasing a currency. All right, so they're devaluing it. They're not printing money. They're just issuing out notes to buy bonds. That's all they're doing. All right, and I'll explain more of this inside of a video specifically dedicated to the Federal Reserve, currencies, and etc., etc. But right now, let's just leave it at that. Moving on, Dow Jones Industrial Average should continue a little higher on the week, although we could have a sizable pullback this week based on whatever happens out of that FOMC meeting. And not only that, we're getting very close to May. May and sell in May go away. So again, people are getting very close to getting on vacation from the stock market, stockbrokers, institutions. The whole motley crew of people on Wall Street are about to take a hike and go home on a vacation with their children and whatnot. So again, volume's going to drop. People are going to sell their stocks, whatever they don't like. Whatever has been a poor performing asset is going to be sold first. And when poor performing assets get sold, Dow components start showing the negative, computer programs step in, and they start selling those higher quality stocks. And of course, that's how a natural pullback works, okay? No manipulation, just how markets work. Moving on, volatility index will continue going lower, but eventually I do anticipate a bounce later on in this week. And I'll probably start looking for short positions later on as well. Keep a lookout for everything, and I'm glad that you guys took out some time to go ahead and watch this video. Take care, folks. If you guys want to use the same charting software, check out the link right below this video. And also, subscribe to my YouTube channel if you want more of this kind of stuff, because I will have more for you guys in the weeks and months ahead. Take care.